JBlog 2010, April 18th. Certainly had some interesting activity on Friday. This is the bad boy that is being blamed for everything. Poor old Goldman Sachs, the evil empire, being sued by the Securities Commission over potential um, bad product that they sold. Personally, I read over the case and I think that the charge is quite ridiculous. Obviously, Goldman Sachs um, cheats. There's nothing new about that. They sell things that they don't believe in themselves, but on the other hand, they are dealing with um, qualified clients. They're not dealing with retail investors, so those qualified clients are buying things, and they should have their own analytics department to understand what it is that they're buying. And now they're just crying foul after because they lost some money on the investment. Well, it's not particularly brilliant here. Um, and this is not unusual. A lot of trading houses will actually look at their clients and that deal with traders, and they will actually look at the trader profile, and they have ways of determining whether somebody's about to blow up just by their behavior, by their trades becoming irrational, and so on. And they'll actually take the opposite side. They know exactly this client is going to die, they're going to go bankrupt, and they're taking the opposite side because they know they're going to make money. This is nothing new. And Goldman Sachs does this. I mean, they lend money to a government and then they sell that government short. If I had the choice, I'd probably be doing the same thing. Governments that borrow enormous amounts of money will eventually go bankrupt. You know, so even though what Goldman Sachs did is highly immoral, it is, I don't think, in any way against the law. But the market certainly was very um, concerned about this and this enormous drop on Friday. It's being blamed for a whole bunch of things. What's even more interesting than the drop is actually the volume that it happened on. Massive, massive volume. And on the other side of that trade, SKF, the Inverse Financial, which of course, does hold Inverse Goldman Sachs, as well as other banks, obviously, had a nice spike on Friday. And it had also massive volume on here. Um, the The street is estimating that there's never just one cockroach, there's always more than one, as Dennis Gartman would say. And therefore, we're going to see other banks being investigated as well and having to potentially write off billions of dollars, either in fees or just defending themselves from these allegations, which are all probably well founded. But at the end of the day, the investors really should have known better. So so that's um, SRS, the Inverse Real Estate, had a 5-to-1 reverse split on Thursday, I believe, and has been increasing a little bit since then. So, in case you're holding SRS, if the price is a little bit higher or a lot higher, don't get all excited about being rich and quitting your job. Because it's not as good as it sounds. I still think this is something worth holding. Look at the volume here, massive volume. Probably the reverse split allowed larger clients to buy chunks of it now. The US dollar hasn't done much of anything. Let's go back. Apple, of course, continuing insanity on the iPad, which is a product I just don't understand. But then I have a technology background, and most technologists do not understand this product. But it seems to sell. There's over 1 million sold of these things. And yeah, I mean, for me, it almost seems like the Tickle Me Elmo craze, but there might be more to this, so we'll see. Apple, of course, is very good at sniffing out deals, and the pricing of this product and the exact timing of releasing it, which went hand in hand with tax refund season and about the size that the average U.S. Citizen would get in tax refunds, made this probably the the choice item to buy from the money that they're getting from the government, quote unquote, which of course is silly. It's their money. Um, but that's what they do. I was hoping there for a while that perhaps consumers got smarter and maybe paid down some of their bills and their debts, but it seems that everybody's already forgotten about the bad times going shopping again. So, insanity rules, and what can we say? Agrium, one of my previous favorites, has been dropping quite substantially. Potash has been doing the same thing. Quite interesting. Another stock that I am short currently, Alpha Natural Resources, a coal company, has had a bit of a drop on Friday, possibly decreasing. Coal in general, the coal indexes seem to be taking a hit. According to the Invest Tools people, money is starting to make its way out of the coal sector and into other sectors, which has a whole range of possibilities that this could impact. Basically, if coal goes down, then that is also a comment on Chinese manufacturing energy usage because China derives most of its energy from coal. So if coal goes down, that sort of implies the market thinks that China won't be needing as much energy in the near future, and that of course does not bode well for international trade. We'll see where that goes. The Invest Tools that I'm talking about is this one here's their view of ANR, and they give it relatively low scores. P ratio is quite high. But this is a little statistic that they do. It's a proprietary indicator that judges where the money is going into and where the money is flowing out of. And coal is definitely one of those things that has spent a lot of time up high in the investment destination, and money is now draining out of it. Potential sector rotation happening here, which will hit all coal companies if this is true. Another company that I've been shorting, actually very nicely shorting, good timing on this one, Simon Properties, SPG. Um, Again, Invest Tools gives it very low marks. I was looking at this, I was looking at the price, I was looking at the sector, and I said there's a potential weak company to be shorted if the market ever tanks. This is one of the first ones to go down, just on the scores that it gets fundamentally. There's a company you want to hold through a crash, and there's a company you don't want to hold. I think this is one you would not want to hold. It's got lots of exposure. They basically run shopping centers, and if the consumer goes, so do the shopping centers, so does this company. So I shorted that, and that was well timed. They dropped quite substantially on Thursday and Friday. That was nice. P ratio on the S&P 500 still sky high at 2183, vastly overpriced, ridiculously overpriced, considering the fundamentals here. I mean, we're almost back to the pre-bubble days. Insanity, and dividends at 188. I mean, give me a break. Why would I want to hold a stock for that? TED spread. Very disconnected TED spread between the TED spread and the VIX. The TED spread has been going up, which means that banks are concerned about each other's ability to repay each other's loans, where the VIX, on the other hand, has been going down until Friday, down to lows that we haven't seen in a very long time. And on Friday, of course, it spiked up so much for the market, seeing everything and knowing everything. Where were you guys yesterday? But a lot of things have dropped due to this Friday thing, this Goldman Sachs thing. I'm still puzzled over that. Why would gold drop? Why would oil drop and it's still dropping? That doesn't make a lot of sense. I think this is potentially connected with airlines, Europe, and volcanoes in Iceland that have cut down on air travel, and that probably has a lot more to do with the whole thing than Goldman Sachs does. But I'm guessing here, so I'm keeping my eye on that as well. Maybe airlines is another thing we want to look at shorting if this if this keeps going on. Anyways, that's all I have for this week. Good luck trading next week. All the best, and yeah, have a good week.